maqasid relate to the environmental goals, which is a very important part of the SDGs. The principle of permissibility arises, which basically says that as long as there's no prohibitions in the things we do, the activities we do, they should be permissible. But permissible activities have to be guided by ethics. Now, if we look at Islamic banking part of Islamic finance, we see that unfortunately the way the banking is operated, it is not contributing much to the SDGs.
Hello again, welcome back to our podcast. Today's podcast we would like to actually discuss about the roles of Islamic finance in accelerating the achievement of the SDGs. Still with me now, Professor HABIB AHMED, the Sarjah Chair in Islamic Law and Finance at Durham University, UK. How are you, Prof?
Very good, thank you.
All right, so well, moving forward to the roles of Islamic finance right now. It is widely hypothesized that Islamic finance is in harmony with the SDGs itself, because we not only account for profit, but also environment, social, etc. So can you please elaborate on this? Is it really true that we can just take SDGs as our Islamic financial goal, for instance?
Yeah, thank you for the question. I think it is an important question because, as you're aware, most of the countries of the world, they have adopted the SDGs as their policy objectives. Now, from an Islamic point of view, the issue would be whether these are in compliance or if they are compatible with the maqasid al-Sharia. Now, if you look at the SDGs, we probably can classify them into goals which are related to the economic development part. Then there are some goals which relates to social. And then there are some goals which are environmental. Now, if we try to look at the SDGs in light of the maqasid, actually, if you look at the 5 maqasid, they are all related to human, individual, right? You're talking about life, you're talking about intellect, you're talking about posterity and wealth. All of these relate to human development, and I would say that these would in some ways be linked to the economic and social goals. Now the question arises, how does maqasid relate to the environmental goals, which is a very important part of the SDGs, and actually it is very relevant for our times. Now some scholars argue that the environment should be added as an additional maqasid. But then if you're including environment, then you're moving from this human elements. How does environment fit into the 5 SDGs which relate to human beings, right? So another approach probably to look at this, which Yusuf al-Qaradawi takes, is he's saying that the environmental issues, all of them are actually linked to the 5 maqasid.
Right.
So if you don't take care of environment, your life will be affected. If you don't take care of environment, your posterity, your future generation will be affected. If you don't take care of the environment, your wealth will be affected.
Yes.
So in that sense, environment actually contributes to the 5 maqasid which are human related. So if we look at maqasid from this perspective, we see that actually there is harmony and there's nothing wrong to say that the maqasid and SDGs have similar values. I just want to make another point is that the principle we use when we talk about muamalat, economic transactions, non-religious, non-ritual kind of things, that the principle of permissibility applies. So I think when we're talking about SDGs, it is more the principle of permissibility arises, which basically says that as long as there's no prohibitions in the things we do, the activities we do, they should be permissible. But permissible activities have to be guided by ethics. And I think the key thing, which I would add in terms of the SDGs, is this SDGs, the goals and also the tools we use have to be driven by Islamic ethics.
Well, yeah, if conceptually speaking, it is pretty much in harmony between the Islamic finance and SDGs, right? How about in the implementations? Do you see the SDGs has been incorporated, for instance, in Islamic commercial finance as well as in Islamic social finance?
I think when it comes to Islamic commercial finance, we can think of two broad sectors. I mean, actually there's more than two, but takaful, so we have Islamic banking sector, the capital markets, and takaful, but takaful is a very, very small part of the financial industry. Now, if we look at Islamic banking part of Islamic finance, we see that unfortunately the way the banking is operated, it is not contributing much to the SDGs. And the way to look at it is, if we're thinking of SDGs, we have to think of impacting the economy in positive ways. The impact has to be productive, increase the productivity, and to achieve the SDGs, the quality of the financing also has to be changed. I think in some ways, if you look at the Islamic finance industry, it is in some ways lagging behind some of the developments we see in conventional finance. For example, I think if you look at the asset side of any Islamic bank, a lot of financing goes to the household sector to finance consumption and also real estate, of course. When it comes to financing the productive sector, the amount is very, very small. The balance sheet of Islamic banks do not allow them to invest too much into infrastructure. So I think when we're looking at the banking sector, that probably is not contributing to the SDGs as much as we would expect Islamic banks to do, given their value systems. I personally feel that the capital market probably can play a much better or higher, have a higher impact when it comes to SDGs, given the nature of capital markets, because by definition, capital markets are long-term, and you can raise funds from different type of investors. There is no problem for the risks which banks face in terms of liquidity and maturity transformation. So given all these factors, I think capital markets probably are better suited in terms of raising funds, mainly to invest in infrastructure kind of projects. Now, there is a gap. The gap is, what about the people element, financial inclusion, and that element. Now, this element, if you're looking at Islamic banks, we see they're not contributing to that. That's where probably the social finance comes in.
Right.
And I think in terms of the SDGs, and if you're looking at the economic and social elements in terms of no poverty, income inequalities, the social finance probably has a very important role to play. And it does not have to do it by itself. As we discussed, they can do it in collaboration with the commercial Islamic finance, in terms of blended finance, and also they can combine the resources to create synergies and also impact the lower 40% of the population who are usually excluded from the financial services provided by Islamic banks.
Yeah, you mentioned that the of course, the biggest assets in Islamic finance is there in Islamic banks, right? And then you talk about how Islamic banks so far is not really, taking the aspiration of Islamic finance on in terms of extending financing to, for instance, small, medium enterprises and more towards the housing, etc. If I can ask, what is really the challenge on implementing the conceptual features of Islamic banks is, that is supposed to be really actually there to promote the Maqasid Sharia?
Yeah, I think that's a very good question and not very easy to answer, but I personally feel that we have to go back to the history of Islamic banks. They were, when Islamic banks were created, they adopted the Western banking model. Now we have to understand that the Western banking model has evolved over 300-400 years, become very efficient in doing what it does. And we adopted that model, and then we wanted to do Islamic banking. With that model also came the shareholders' perspective in terms of the organizational format. It was structured basically to make profit for the shareholders, and that led to the Islamic banking to have a business model which was very much focused on generating profits using Sharia compliant contracts. Now, I think to answer your question, how we can move to a situation, I think the first area is a conceptual. We need to have a conceptual reorientation of what Sharia compliance means. Currently, when we are looking at Sharia compliance as practiced in Islamic finance, it is taken in a very legalistic and formalistic perspective. The ethics part is missing. When we talk about maqasid, it is the ethical reflection of Sharia. It is basically, Sharia is there to enhance welfare, minimize harm, and this perspective, I think, is missing from the definition of Sharia compliance. So I think moving forward, if we really want to have Islamic finance which reflects the ethical values and also the legal principles, we have to bring back this ethical perspective in the definition of Sharia compliance. And that will in some ways change the orientation of how Islamic banks are doing business. So I think this is the first part, that there has to be an reorientation of what we mean by, or reinterpretation of what we mean by Sharia compliance, moving from strict legal interpretation to including the ethical values. The second thing, of course, is I think that this change in ethical conception has to be implemented at the banking level. That means that there has to be change in the practices of banks. And I think the way to do it is to, when they are making decisions to finance projects or sectors, they have to think of not only the economic returns, but also what are the social impact, what are the environmental impact, because as we discussed, these are actually elements of Maqasid al-Sharia. So I think the way to move towards a more socially responsible financing in Islamic banks would be to reorient the concept of Sharia compliance to include ethical values reflected in Maqasid, and then have ways and means to implement it in practice.
Right, that's very interesting. So, just a little bit on the Islamic fintech on that note, Prof. Do you see Islamic fintech can also play roles on promoting the Sustainable Development Goals?
Yes, I think the future is going to be about fintechs, and the good thing about fintechs is that it can solve some of the problems which brick and mortar financial institutions face in doing certain transactions. Like the financial exclusion is partly because from a bank's perspective, the traditional legacy bank's perspective, the costs are too high. There's no information on the micro entrepreneurs, so there's more risks among others. So I think the fintech, when it's using digital technology, it can in some ways reduce some of the frictions which arise in financing. When you talk about frictions, we're talking about information frictions. Digital technology allows you to gather data information from different sources. Then we're talking about frictions in terms of delivering services. Digital means reduces those frictions significantly because you can transact digitally, and anybody can access their services through a mobile phone, for example. So there is a lot of potential in terms of fintechs providing services to people who do not have access to finance now. Now, in terms of Islamic finance, I think, as I mentioned, Islamic banks are entrenched or embedded in a structure which in some ways prevents them to do certain things. A lot of things which we expect Islamic financial institutions to do, probably fintechs will be able to do it better because they do not have those the constraints, the organizational constraints and the regulatory constraints which Islamic banks face. So I think the future of Islamic finance in terms of having more value-based financing, I feel that the fintechs probably are better organizational structures to provide those services.
But do you also see challenge on fintech as well?
I think the key challenge in fintech are the risks which arise with it, and of course, if you look at the risks which financial institution like a bank faces, we can think of 4 risks: the credit risk, the market risk, and liquidity risk, and operational risk. I think using fintech may reduce some of the risks like credit risk and other things, but what happens is in the operational risk you have the technology risk. That will become very significant, and I think the key challenge moving forward with fintechs would be to ensure that these additional risks which are arising, these are mitigated. And in that sense, I think the regulators have to play a very important role. The regulators, when they are encouraging fintechs, they are doing it because it can enhance financial development, it can enhance financial inclusion. But at the same time, they have to protect the consumers. And the protection of consumers is mainly from the cybersecurity related risks which arise. So yes, there has to be a balance, and I think moving forward, the risks, new risks which arises from technology, these need to be in some ways kept in control.
Interesting to see fintech has the, large, rooms for, making the SDGs, the achievement of SDGs accelerated in terms of Islamic finance, right? In the previous video, we talk about the blended finance in general, right? Do you also see, or probably how is the so-called, if we put everything Islamic blended finance can also play a role? Of course, conceptually speaking, probably we might not have a problem, right? Because in Islam, of course, we have some, Islamic social funds that's there. Waqf is there, zakat is there, right? Infaq, sadaqah are there, right? But what about in reality, right? Can we rely on the blended between the Islamic philanthropy with the Islamic commercial finance? And what is the challenge to actually make this model comes through?
I think, yeah, that is, I think, an interesting area and a new area where I think more work needs to be done. If you look at the potential of zakat and waqf globally, they are huge. I think there are estimates that the global zakat collection can range from 200 billion to $1 trillion US annually globally. And you have to understand that this is an annual revenue which can be generated to do actually a lot of social activities, particularly focused on poverty alleviation. Now, then we have the waqf sector. Again, the waqf sector is a very important element. It's the social capital which the society builds to serve the society. And over history, Muslims have contributed to the waqf sector. The waqf sector is significant in a lot of Muslim countries, including Indonesia. I think there was a study by IRTI which estimated the value of waqf to be 60 billion. Probably it is much more than that. But even if we assume that the rate of return is 5% on those waqf assets, that translates to $3 billion US, which can be used for different purposes. Now, your question of whether this sector should operate separately or blend with commercial finance, I think there are certain areas where, as I mentioned in the previous talk also, that there can be synergies which can be created. And I can give you one or two examples. Actually, one of the financial institutions in Indonesia, Baitul Mal wa Tamwil, if you think of it, it is actually a blended finance model. You have the Baitul Mal part where you have the charitable part, probably zakah is also used there, and the Tamwil part, which is the finance part. But the problem is, even though the model has both the social finance and also the commercial finance, they're not being used to create the synergy. The way to use these together is, I think, from what I know of Baitul Mal wa Tamwil, when they're financing, they do finance people from low-income households, but they do not finance the core poor. Because I think one of the key issues with this financing model is that you must have a collateral. Now, the core poor may not have that collateral. So now, if you can combine the Baitul Mal part and the financing part, I think, as we discussed, if the Baitul Mal part can subsidize the Tamwil part, then you have a model where you can actually finance the core poor. And this is a very good example where you can have blended financing. I mean, as I said, it exists already in BMT, but it is not being implemented to, in some ways, create the social impact which it can create. Another area where I think there can be synergies between the waqf sector and also the Islamic finance sector. There, the waqf can benefit from Islamic finance. And a good example of this is Awqaf Properties Investment Fund, which is based in IDB. It is a fund created to actually invest in waqf properties. Now, a lot of these waqf which we find in different Muslim countries, they are actually in very prime areas. But unfortunately, because over the years they have not been developed, the properties and the real estate sitting on them are not very productive. So if investment can be made on these properties, you can actually generate huge amounts of return. And I think that's where this fund is a commercial fund, which invests in waqf properties commercially. It develops the waqf property. The waqf generates multiple times the return it used to get from that property. And the fund also benefits and the waqf also benefits. So this is another example where we can see the synergies and blending of Islamic finance and social finance.
Indeed, I mean, Waqf is very potential, right, on accelerating the SDGs, achievement. Many said, however, that what you call the human resource or the talent who's actually running the Waqf fund are pretty much still traditional, and they are more towards NGO rather than like investment managers. Whilst of course in Waqf we need to have that kind of vision, like and skill to invest and then to assess the opportunity of the investment, etc. Right? Do you think the human resource capital in Waqf fund, I mean, generally are still scant, or we need to improve that, or probably you see other challenges on developing these Waqf institutions?
Yeah, I think that's a very important point. Relates to the management of Waqf. Now, one of the issues about Waqf management is the founder of the Waqf. He or she identifies how the Waqf will be managed. And traditionally what has happened is these Waqf are managed by family members. And the family members may not be the best managers of assets. So this is unfortunately a problem inherent in some Waqf, and these are the legal bindings which unfortunately can limit how the management of Waqf can be improved. Now, coming to your point, if we are thinking of Waqf created during contemporary times, I think it's very important to have contemporary management systems in place to ensure that the Waqf properties are managed so that the impact of Waqf can be maximized. Now, we can think of the contemporary ways in which endowments are managed, for example. It is a professional job, and it requires different types of knowledge and skills. And I think that's what is needed for management of contemporary Waqf. And I think one aspect of it would be that at the educational institutions, do we have training and courses which actually deal with Waqf management? If you look at some Western universities, actually you can take degrees in non-profit management, right? I think this is an area where universities and other educational institutions, not to come up with degrees, at least some courses or a certificate on how to professionally manage Waqf during contemporary times. And the other thing is there are and probably this is an area where we can see some synergy between the commercial Islamic finance sector and Waqf sector, because in the West, a lot of the Waqf, the endowments are managed by the financial institutions. And I think we probably can also think of Islamic financial Waqf management professionals and institutions which can manage the Waqf properties. So the management of Waqf can be outsourced to actually Islamic financial institution or a professionally managed fund manager, for example. And in that way, we can see that the Waqf will be in some ways creating more impact in the society.
We in Indonesia, we have a new rule, Prof. It's called the Omnibus Law for financial service institutions. And then in that rule or law, Islamic banks now can be a Nazir. So Islamic banks can manage the Waqf instead of only collecting the Waqf. So we'll see how it works. Probably in 2 or 3 years later. But yeah, I mean, it's very important to have really the professional, right, investment managers in the Waqf management.
I mean, I think that's very interesting because this is actually an additional service which Islamic banks can provide. There are some specialized organizations which also provide this. Now, if you think of wealth management, it is not also only the wealth which is managed when a person is living. Wealth management also includes what happens after a person dies.
Yeah.
So you have this whole service related to estate management and legacy management. And I think if you're thinking, you know that as Muslims we can give 1/3 of our property to Waqf.
Yeah.
So this is another element in the asset management framework where we add the legacy management, and a part of that is Waqf management. And the donor of that Waqf can actually make the Islamic Bank as the manager of that Waqf. It will be probably more professionally managed. So I think it has a lot of scope for development.
Of course. Yeah, I mean, Indonesia has been developing the Islamic finance quite a bit here, as of course, the one of the concern of the government right now, right, to accelerate Islamic finance assets, etc. Right. So probably this is the last question for this podcast. So seeing all the progress that Indonesia has in terms of Islamic finance, right? As an expert, researcher, applied researcher, not only researcher on this topic, Islamic economics and finance, how do you think us, Indonesia, can move forward in terms of Islamic finance, especially to actually support as well the achievement of the Sustainable Development Goals here in Indonesia?
I think Indonesia is a very interesting country for Islamic finance due to different reasons. One is, I think a lot of Islamic finance here is driven by civil societies. In like Malaysia, the model has been top-down. Here, I think there is a lot of interest at the civil society level, and that's why you have certain Islamic financial institutions which are unique to Indonesia, and BMT is one of them. So that's one of the features. The second element, I think, of Islamic finance during contemporary times in Indonesia is that I see that the government is very supportive of Islamic finance, and it has not only Islamic finance, also the halal economy, among others. And I think this is a very positive development, and it will encourage innovations and coming up with new types of solutions to a lot of problems which the society faces, including achieving the SDGs. In terms of the moving forward and challenges, I think one of the key problems which I see in Islamic banking especially, the proportion of Islamic banking assets seems to have not moved much. And there is a question why this is so. And I think one of the key things would be to provide financial services to the people which makes economic sense to them. So instead of selling them quote unquote Islamic products and try to look at it from a religious perspective, I think if Islamic banking products can be sold as ethical products, and also if you can provide the services in a much better form, in a competitive form, then you can probably benefit more people and expand the share of Islamic banking in Indonesia. I just want to add that I think when it comes to capital markets, Indonesia has definitely been, I think, one of the key issuers of sukuk, including green sukuk, and I think these are very positive developments. I think Indonesia is one of the few countries with capital markets is probably larger in terms of value than the Islamic banking assets. In most countries, it's the other is the opposite. So this, in some ways, also reflects the eagerness of the government to actually use Islamic finance instruments to to produce, or to achieve the SDGs. And again, one of the innovations which I think got the IDB prize this year was the Waqf-linked Sukuk. And again, this is a very innovative product. So I personally feel that I see so many universities offering Islamic banking finance courses, Islamic economic programs. I see that a lot of knowledge will be produced in the country, which will hopefully contribute to a better model of Islamic finance, which can benefit the society.
Hopefully, Prof. And lots of lecturers in Indonesia are actually the students of Prof. HABIB AHMED from Durham University. Right, this is the end of our podcast. Thank you very much for listening, and thank you very much, Prof.
Thank you very much
for being here. And we'll see in the next podcast. See you.